Hey guys, how's it going? Back with another daily update video. It is Friday, July 10th. It's 5:01 p.m. The markets are closed. The trading week is ended and we can now relax for the weekend. And I don't know about you, but these past 3-4 days of trading this week just never felt good for me. I felt like I did not make good plays or good positions. The market was just way too volatile and up and down. And I just feel like I did not make good plays this week. Thankfully, I did not lose money. I did profit a little bit, but I feel like I could have profited more or I left money on the table. It just wasn't feeling good. I felt like I was in a funk. And I'm kind of glad that the trading week is over and the weekend is here because I can reflect on my trades and try and learn from some of my mistakes or where I potentially left some money on the table. But also it's nice to just take some time off, because I think once you're trading every day or every week, you kind of get caught up in things and sometimes you just feel off. And I think it's okay just to take a break and just to take some time off, just to kind of decompress and relax and gather your thoughts. You don't have to be in the market every single day, because the last thing you want to do is start making a string of bad plays where you start getting assigned shares of stock, or you end up bag holding, or you end up losing money. So I think sometimes you just got to take a break. And one of the other big things that I find myself doing when I kind of get stressed out or just kind of get caught up in things is I always feel like I need to make trades. So I'm like, oh, this option, let me close this one out and open up another one because I think I can get more profit here. So I'll close this one out for like a $5 profit, but then I can get $30 of profit if I open up another trade. And you just end up mucking things up and you keep, tinkering. And I think that kills your profits because, one, there's no guarantee that your theory or hypothesis is correct. And you just like tinkering by opening and closing a lot of trades, you're just racking up commissions fees on top of that. So it's making it harder for you to be more profitable. But in my experience, the more you tinker with trades, unless your strikes are getting tested and you have a reason to tinker with it or roll it out, I've always found that the more you tinker with things, it just never ends up turning out well. So that's just my personal experience. Let me know if you felt the same way this week or in general. But taking a look at the big board here, a lot of green on the board. But again, it was kind of like an up and down day. It didn't feel good. The market didn't feel good this week. Take a look at big tech. So pretty much sideways. Some tech was up a little bit. Some tech was down between Amazon, Facebook, Google, Apple, Microsoft. Semis got hit a little bit. AMD was down 2.4%. And I thought this would happen. I said in my video yesterday that AMD closed at $57 yesterday. I mean, it rallied like $6 or $7 in a day. So I knew there was going to be a lot of profit taking on, especially in the morning. So I kind of figured that AMD would kind of settle back in around the $54, $55, maybe $56 range. So that's not surprising at all. Micron was up 1.4%, which is great for me because my cash secured put is secured. Nvidia was a little bit sideways. The more I look at the semiconductor stocks, I really like them in terms of like Nvidia, AMD, and Micron, and the SMH ETF. And one thing I've learned is that, if you're a gamer or if you're into building computers, you definitely know about AMD and Nvidia in terms of their graphics cards, and AMD also produces CPUs. But one of the differences between these two stocks, which you may not know, is aside from their price, AMD is currently at around $56, where Nvidia is over $400. So if you have a small account like I do, you're probably more inclined to play AMD. But one thing that Nvidia has over AMD is that Nvidia is in the artificial intelligence business as well, where AMD is not, to my knowledge. So there's speculation that a lot of the gains on Nvidia right now, as compared to AMD, is because of their AI business. Because in the future, it seems like there's more and more applications of artificial intelligence. So that might be something getting into for those of you with larger accounts. But just keep in mind, if you want to sell cash secured puts on Nvidia, you would need about $42,000 in collateral just for one contract because the price is so high. But it might be a stock that I'm going to keep on my radar if we do go into a prolonged dip and this stock is like 40%, 50% off. definitely a stock for the future that I may want to buy shares on long term and then decide if I want to sell covered calls on going forward. But it's definitely been on my watch list, just a little bit too rich for my blood right now. So let's take a look at IWM. So IWM had a pretty green day, which is what I was waiting for all week long. So thankfully it happened today, the day that my option was expiring. So I had a cash security put on IWM that I will admit I did not collect the greatest premium on. And that's kind of partly what I was talking about in terms of I just felt like I didn't make good trades this week. But I sold the put on IWM at the strike price of $137.50. So that meant there was $13,750 in collateral, and I collected $59 in premium for that. So just to calculate my return on risk, it was $59 divided by $13,750. So that means my return on risk was pretty much at 0.4%, 0.43, which is fine. That's my personal bare minimum return on risk that I want to collect. And I was okay with that because I wanted to play it safe this week just because stocks were hitting all-time highs and things were just getting crazy. So I just wanted to play it extra safe so I didn't end up bag holding shares. So I'm happy with that. But in retrospect, my 137.50 was pretty much secure all week. There's only one point here on yesterday, where we touched 137.50. But, in hindsight, since we closed today at 141, I would have been secure at a 141 or lower strike price. But again, a 140, 141 would have been too risky for me. But in retrospect, I left some money on the table there. Maybe I could have gone with a 138 or a 138.50 strike to collect a little bit more premium. But anyway, profits are profit. Nobody ever went broke taking profit. And there's always another trade next week. So we'll just move forward. And the other option that I had on this week was on Micron. So that's ticker symbol MU. And Micron also was pretty much green all day and ended up closing strong, up 1.4% at about $50.70. So I had a strike of $48 on Micron that I collected $22 in premium for. So $22 divided by $4,800 in premium is, again, roughly 0.45% return on risk. So again, a good return on risk for my personal safety level of 0.4%. I made good gains. Again, profits are profit. So I made this week $22 plus $59. I made $81 in profit today because the options both expired today. And again, I have cash now that I can play for trades next week. I'm 100% cash again going into the week because both of these options expired worthless. So I'm happy about that because if bad news comes out this weekend or the market decides it's going to open up in the red on Monday, I have a lot of dry powder and I can even sit the market out if I wanted to, if I'm a little bit too scared of getting in. So that's how my trading week was. Leave me a comment below. Let me know what options you played this week. Did you close them out early? Did they expire worthless? Hopefully you were all profitable and nobody was caught bag holding. I'm curious to see if anyone did get assigned shares because we had a really rough day yesterday. And I don't know, depending on what strikes people chose, if they actually ended up getting assigned shares. So if you did get assigned shares, let us know what stocks you are holding now and what's your plan going forward. So let's just take a look at the graphs here. So here's the graph on IWM. So you can see, the RSI is pretty much near the middle. It's 58, so not really overbought, not really oversold. It's touching right now the 61.8% Fibonacci level. And so it's going to be up to the weekend to see where we open up Monday morning, meaning are we going to break through that Fibonacci and trade above 141? Or are we going to bounce below it and trade in this Fibonacci range between about 132 and 141? So I have to keep an eye on it. IWM has been very volatile the past few days. And one thing to keep in mind about IWM is that this is the Russell 2000 ETF. And the vast majority of stocks that make up the Russell 2000 are financial sector stocks. And the reason I bring that up is because this coming week, so next trading week, a couple of the bank stocks are going to have earnings. So on Tuesday, JP Morgan Chase, Wells Fargo, and then on Thursday, Bank of America, Friday, Ally Bank. So a lot of financial sector stocks or bank stocks have earnings this coming week. So depending on how the market reacts to their earnings, IWM may fluctuate a lot. So I think we're going to have big moves in IWM next week, but I don't know and I can't predict whether they're going to be big moves up or big moves down. It all depends on how the market is going to react to these banks' earnings reports. I think we'll have a good idea on Tuesday because once JP Morgan and Wells Fargo report, I'm going to assume that Bank of America and Ally are going to have similar results or similar reporting numbers. So I probably would stay away from IWM tomorrow or this coming trading week just because I'm assuming there's going to be a lot of volatility since it's primarily made up of bank stocks and financial sector stocks. So just a heads up if you're looking at playing IWM, but also if you currently are playing or have options open on any of these bank stocks. So just be on the lookout for that. Now taking a look at Micron here. So we had a nice rally today. So decided to stay above the 61.8% Fibonacci level. You can see it kind of bounced off it a little bit twice today. So that tells me now that Micron is looking pretty strong. So if I want to open up a put next week, I would love to get in at below $50 because I think that's going to be a support level now for Micron, assuming we have a good weekend and nothing crazy comes out in terms of negative news. But you can see in the past couple of days when Micron traded around 49, it immediately bounced back up. So if I can get in at a $49 or $49.50 put next week, I'm pretty confident that it'll be safe for the rest of the week. So I'll keep an eye on that. So here's AMD. And as you can see, we peaked yesterday around $57 and some change, and then we sold off. I'm sure this was a lot of profit taking. Again, on the RSI, you can see we were overbought. And I mentioned that in my video last night that we were overbought, so watch out for profit taking. So hopefully, if you end up having shares of AMD, hopefully you cashed out first thing today morning or at the end of close, or I'm sorry, right before close yesterday, and just got some nice profits. Let me know if you did that. I wish I had AMD shares and I had this nice run up and would have just cashed in a couple $100 easy off that run up in one day. So here's Disney. Disney actually took off the past 2 or 3 days from about 114 to a close of 119. So it rallied $5 in the past 2 or 3 days. And that's because the Disney World has opened back up. But the conflicting news is that although Disney World opened up, Florida is reporting like record number of cases of the illness, which is crazy because you would think that would have negative impact on the theme park opening back up and bring the stock down. We'll have to see. I'm probably going to stay away from Disney next week as well, just because it just doesn't make sense that the cases are rising in Florida, but Disney parks are reopening and the stock is rallying back up. I don't know if we'll have a pullback if more bad news comes out over the weekend, or if Disney decides to shut its parks back down because of cases rising higher and higher. So I'm going to stay away from Disney for that reason. Let's take a look at the SMH, the semiconductor ETF. I believe SMH has hit all-time highs. Yep. Looks like pre-pandemic it was around 152 and we closed today at 160. So the more I look at this ETF, I really like it as a long-term play, but I don't want to buy in at all-time highs. I want to buy in at a discount. So if we have another dip like we had earlier this year, I would have loved to get in like $96 or below 96 if we have a prolonged dip. So this is definitely another stock on my long-term list along with NVIDIA, even though that NVIDIA would somewhat be incorporated into this ETF. But I'm really loving the semi sector right now. So a lot of those stocks are on my watch list, not only for options trading, but also for my long-term options list if we go into a prolonged dip and these stocks get really cheap. So take a look at, let's say, the stocks that were the volume leaders for today. Just refresh this page here. So AMD, number 3 on the list. Again, that $6 call. People are still very bullish on AMD. I'm not sure what CLF is. Let's see what that Cleveland Cliffs. I'm not sure what that is. I'm not sure why that was the most popular option today. I'll have to look into that. I'm going to go out on a limb here, and they must have some news that came out that made it a meme stock or a hype stock. I'll have to look into this, but I'm not familiar with CLF. Disney, I think this is based off that pump and the rally over the past couple of days. Disney 120 calls were very popular, and that makes sense because we were trading at 119 all day long. So people are probably presuming that over the weekend that stock price is going to rally, and that will probably close Friday above 120 next Friday. So that's probably why this was the second most popular stock option that was traded. Walmart's still up there off the news of Walmart Plus being launched. Here's another AMD. So here's bank stocks. So Bank of America, JP Morgan. So these are all calls. So people are probably predicting bullish sentiment off of earnings next week. So that's interesting. But keep in mind that some of these are monthlies, or actually more than a month, because these are September 18th plays. So people might be playing the volatility of the pre-earnings right now. So just keep an eye on the bank stocks and be careful if you have options open, because they're going to be very volatile. They've been volatile already just because of the market in general, but now during earnings week they're going to be even more volatile. So that does mean that the premiums are going to be super high, but just be careful, play it smart if you're going to play the bank stocks. Again, not financial advice, just giving you guys a heads up that bank stock earnings are next week. So let me know how your trading week went. I'm very curious to see how much profit you guys made. And we're getting close to that Discord server. We're getting close to 900 subscribers, only about 100 away. So I'm going to predict in maybe about 2 or 3 weeks, we should hit 1,000 subs. I'm going to work on setting up the Discord server this weekend. So when we do hit that 1,000, we're ready to rock and roll. And as always, if you have any questions or comments, leave them below. And happy trading.